Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and I'm making professional trading simple. And a new week, so new plays and a new ideas on the market direction. I want to say thank you to whoever signed up for stock charts and used me as a referral. Apparently, I get some extra time added to my subscription. If you do that, I truly, truly appreciate it. So it did not tell me who that came from or who it was that signed up, but thank you so much for using me as a referral and when you signed up for stock charts. On to the new week. Once again, a crossroads. Very hard to tell which direction for sure we're going to head on Monday. I'm not even sure the futures are going to tell us unless they start way up or way down one direction. What I mean by way up or way down is probably 8 points. If we get an 8 point gap up or down to start the day, that will probably set the tone for maybe at least early in the week. But where we're at right now, you can see just by looking at a Dow chart that we are caught right in the middle of this particular support resistance area. We're right back to this little trend line here. We are holding above it. We are above the 20. I think, if I'm looking at the charts in a bigger picture, I guess I have to be bullish. Neutral, very neutral to just slightly bullish, really, at this point. I am going to wait and let the charts make up my mind for me. So don't rush. Don't start reading stuff this weekend and thinking that it's going to go up or it's going to go down, because if it doesn't go the direction you think it's going to go, you'll be disappointed. There's no reason to let your own ideas uh, depress you when the expectations don't work the way you think they're supposed to. Let the charts decide. We are right in the middle of support and resistance areas right here, and we're just looking for a break above here or a break below here. Now, my student that I've been working with the last couple days, and that's why this video is out a little bit later than it normally is, did make a mention to me that he thought it was like the last 8 or 9 months that during options expiration, those weeks have always been up. So, why not? Well, why wouldn't it continue this week? So we have to look at that as well, historical data, and that's what we do as technicians, is kind of look at historical data and try to figure out what might happen going forward and increase our probabilities. So we have to look at that data, obviously take that into effect. If all of them have been up, why not this one too? And it would make sense from the way that some of the charts are looking. Some of the charts are looking kind of bearish. I'll point that out as we move forward. But a lot of these are looking still bullish, so no reason to think we can't get there. And what we're looking for is a break above this area to go long and a break below this area to get short. Really, if we're going to break below this area, look for a break below the 50 period moving average, which is right in line with this little trend line I have drawn in here, so you can't see all of it on the way up. So going forward on a 60-minute time scale, if you're going to intraday trade the Dow, look for a break above here or a break below the 50 to really get to find your direction. A gap one way or the other could help, but it's got to be 6 or 8 points. If we gap up tomorrow, watch to see if the gap is up above this line. If it is, you may see a retest in the morning and then see it take off to the upside as bears cover. I'll be watching for that. From a daily standpoint, once again, we're straight up back to resistance, and now we're kind of sideways up, and that's exactly what we've seen here. Sideways to up, sideways to up, sideways to up. It's all the same motion. So why not more of that? Maybe we see another push up to retest the upper side of this resistance line. That could very well happen. That's all this has done in the past. Same thing. So same song, different verse. People have told me that it's been very difficult to trade, and the truth is, if you've just let the charts do the work for you, it hasn't been all that difficult. It's been, since about back in here, sell resistance, buy support, sell resistance, buy support. So why not sell resistance? And if it gets back down here again, buy support. Why not? It's worked in the past. Seems to be the way the progression's going. Eventually, this pattern's going to break. It's either going to break up or it's going to break down. I would have to say that obviously, I think it's going to break down. This type of a motion all the way up, and then all of a sudden to see a blast through the top without some kind of a pullback in the markets like we even saw back here in June, July, the old head and shoulders fake out. At least it had, some sort of a pullback to it. This has seen nothing like that yet. So I would expect to see that before we see a higher break to the upside. Markets are the markets. They'll do whatever they want to do. I'm just along for the ride. Look at the NASDAQ on a 60-minute. Look at this consolidation right above support, all moving sideways. A simple break above this 1794 takes us right back into this 1800-ish area, and just above, which we looked at on the weekly. Why not? We're moving sideways, consolidating right into a support area. We've got the 20 and we've got this trend line. So unless it breaks down below the 1770 area, the motion's got to be heavy bias to the upside after we hit that line, and that should happen early. Here's that upper line that I'm looking at on the daily. That's right up about that 1800 area. That also coincides with the weekly, and that's up here about the 1800 area as well. So we continue to watch and see exactly where these markets are going to go. Once again, we're just playing the levels. Let the markets choose your direction for you. Here we have kind of a triangle happening on the SPX. Now you'll notice that as I'm going through these charts, the Dow, of course, still the strongest, NASDAQ kind of in between, and this S&P is kind of bringing up the rear here. Could be that the banks have been a little bit more weak than normal lately, and that's what's holding everything back. That would be my first guess as to why we're seeing what we're seeing. But a break above this line here, we get above this little heavier trend line here, and I don't see why we don't retest this 1100 to 1105 area. I don't think there's anything stopping the bulls once we get above that. So we're in a situation where if the bears are going to make this happen, they really need to turn this around very soon. But we haven't seen that strength from the bears yet. Every time it's been, well, the bears got to turn it around now. They don't. Bulls win. And that's all. That's the way the story's been. So no reason to think that if we get above here, we don't see this test of this little trend line here, along with maybe this upper area here, right around the 1100, 1103 area. Maybe even a test of this 1105. The 1105 area breaks, and it's anybody's call. Bears will cover at that point, and bulls will rush in. I called the head fake back here on this one, but I don't believe that'll happen twice. I think if we get above this area, above the 1105, I think the run is on to maybe the 1120 to 1130 area. On the daily, we've got this orange line holding as resistance. Once again, in a double topping area here. Maybe this plays out like the NASDAQ did. The NASDAQ came up to a double top area, but eventually did break through and looks like it's going to run a little bit higher. S&P could do the exact same thing, only a few days behind what the NASDAQ's doing. SPX on a weekly. Now, see this rising wedge we've been watching? We did have a break of it, and now we're coming back and we're retesting the underside of it. For me, that is the kiss of death. So next week, or tomorrow, starts a new candle off to the right, which still leaves us room to the upside. Retest the bottom of this trend line, make a higher high than 1105, but yet remain below and out of this little rising wedge that it's been in. Watch for that to happen on a move up early in the week. Totally plausible scenario if we move up. Maybe even poke our head back into it a little bit to retest this little resistance line coming down. We'll see, obviously, a weekly candle here. We'll see where the weekly candle ends, but we're watching for it to stay from a bearish side. If you're bearish, you want it to remain outside of this trend line right here, for sure. VIX on a daily, I took out all the trend lines I had drawn in because it's just ugly. It's like this little megaphone type of a thing where we've got a line going this way and a line coming down this way. It's just a widening megaphone. The move up, if we get a move down in the markets and this VIX tends to move up, and I guess we don't have to go down in the markets, but if the VIX moves up for a day or two, then I can draw in some different trend lines and we can kind of maybe get a better idea of where we're going with things. But for right now, it's just an ugly chart on the daily. So we'll stay with the weekly. A little bit more clearly defined support resistance areas on the weekly. Starting tomorrow, we'll be right back at or right on this previous support and the 200 period moving average on the weekly, with support at the dotted line and then below at this big fat green line with, of course, these trend lines down here as well. Above us is the all kinds of stuff. The 20, this 30 back up here. That would be a pretty substantial move in the markets to the downside, I would believe, to see us get back up here to 30 again in the VIX. Apple on a 60-minute. This is